ladies and gentlemen. Good day, everyone, and welcome to Vipshop Holdings Limited second quarter 2025 earnings conference call. At this time, I would like to turn the call over to Ms. Jessie Zhang, Vipshop's Head of Investor Relations. Please proceed.
Thank you, Operator. Hello, everyone, and thank you for joining Vipshop's second quarter 2025 earnings conference call. With us today are Eric Shen, our co-founder, chairman, and CEO, and Mark Wang, our CFO. Before management begins their prepared remarks, I would like to remind you that the discussion today will contain forward-looking statements made under the safe harbor provisions of the U.S. Private Securities Litigation Reform Act of 1995. Forward-looking statements are subject to risks and uncertainties that may cause actual results to differ materially from our current expectations. Potential risks and uncertainties include, but are not limited to, those outlined in our safe harbor statements in our earnings release and public filings with the Securities and Exchange Commission, which also apply to this call to the extent any forward-looking statements may be made. Please note that certain financial measures used on this call, such as non-GAAP operating income, non-GAAP net income attributable to Vipshop shareholders, and non-GAAP net income per ADS, are not presented in accordance with the U.S. GAAP. Please refer to our earnings release for details relating to the reconciliations of our non-GAAP measures to GAAP measures. With that, I would now like to turn the call over to Mr. Eric Shen.
Good morning and good evening, everyone. Welcome and thank you for joining our second quarter 2025 earnings conference call. In the second quarter, our team acted swiftly to revive customer activities and sales momentum, driving stabilization in our business. These efforts delivered measurable progress against our key priorities for renewed growth. Total GMV returned to growth, driven by clear strengths in apparel-related category, reflecting our refined adjustments in the merchandising portfolio. Total active customers also showed clear signs of recovery. Super VIP membership sustained its double-digit growth. In the second quarter, active SVIP customers increased by 15% year-over-year, contributing 52% of our online spending. This high-value customer segment continued to outperform in terms of sales and revenue growth. With the fast-moving industry dynamic, we remain anchored to the vision of the discount retail for brands. We believe at its heart, discount retail for brands is about offering customer-beloved brands and high-quality product at exceptional value. While the execution may innovate, the fundamentals stay true: great brands, great quality, and great value. To achieve this, we are making change to sharpen our merchandising strategy, which is key to deliver unique, compelling value to brand partners and customers. We are relying our merchandising team to better capitalize on evolving customer trends and lifestyles, while enhancing cross-category synergies. Operationally, we are taking a more holistic approach to plan and manage our brand and customer interactions to maximize platform-wide value creations. We will also unify the marketing, customer growth, and engagement efforts to advance customer value through each lifecycle stage across customer segments. We hope these initiatives will inject great agility and efficiency into our business model, creating a self-reinforcing flywheel that advances our growth priority from merchandising operations to customer engagement. So start with merchandising. We are pursuing a path that is unique VIP shop. We focus on the three pillars of our merchandising strategy: relevancy, differentiation, and specialization. In a competitive environment, we're standing out by consistently offering custom high-value brands that they love, exclusive made for VIP shop, customized products, and carefully curated portfolio of highly sought-after items. In the meantime, we keep up with new trends, new styles, and innovative fabrics and materials in each category. This ensures a steady and sustainable inflow of inventory that aligns with shifting customer demands. In the first half, we added close to 500 brands to our platform, which are gaining traction among customers. The Made for VIP shop line is a key part of our differentiation. It's delivering a more compelling brand of the quality and value that results in high-value customers, repeat purchase, and better conversions. In the second quarter, it maintained strong sales momentum, contributing a meaningful portfolio of our apparel sales. For many brands, these customized products accounting for more than 20% of their sales on our platform. In the second quarter, we added more high fashion selections, achieving improved sales through. We saw growing customer recognitions of our platform as the go-to place for flash sale and treasure huntings. Leveraging our global sales capabilities, we will have the steadily stream of differentiated items that flows into our assortment, so that shoppers always have something to discover as they come back. For our customers, we continue to create a unique experience that not only reinforces the affordability and the reliability they love, but also inspires them to discover the value and the freshness we offer. This is coming from optimized traffic allocation, along with the customer journey enhanced through improved search and the recommendations for both existing and new offerings. A good example of our customer-centric approach is the SVIP loyalty program. In the second quarter, we upgrade our private sales for SVIP member, offering high beloved branded products to create a great sense of exclusive and delight. We expect the loyalty program to deliver a more differentiated and personalized experience for our top-tier customers. Lastly, we continue to develop and leverage AI capabilities as part of our overall technology advancement to drive growth and efficiency. We are deepening collaboration with business teams to expand AI application cases and deliver measurable results. We see promising early traction across our AI initiatives. AI-generated reviews and Q&As are contributing to enhance customer journey. AI-driven sales support is showing initial benefits to conversions and issue resolution. Besides, AI-powered marketing contents are demonstrate effective reach to potential customers. Despite the near-term challenges, we are investing in multiple ways to grow share across our merchandising portfolio and customer segments. Our roadmap for sustainable profitable growth in the long term relies on the consistent and collaborative execution every day. It stays true to who we have always been, while adapting to evolving trends, enhancing our capabilities, and always thinking about our unique role in retail for today's customers. At this point, let me hand over the call to our CFO, Mark Wang, to go over our financial results.
Thanks, Eric, and hello, everyone. We have delivered another quarter of healthy profitability, with margins held up, well as we moved at pace to stabilize the business. This underscores our team's consistent financial discipline in a dynamic operating environment. During the quarter, we prioritized investments in growth initiatives related to customer engagement and the merchandising categories where we saw good momentum. We were more agile to dynamically reallocate resources in response to more productive activities that really helped the business grow at a profit. As Eric indicated, through a series of organizational change, we have further enhanced strategic clarity and execution speed across company. Though we are early on our journey, these actions are building tangible traction, enabling us to position the business for return to sustainable, profitable growth in the quarters ahead. Furthermore, we are firmly on track to deliver on our shareholder return commitment for 2025, which is no less than 75% of the RMB 9 billion full year 2024 non-GAAP net income. In the first half, we distributed a total of over $640 million through a combination of dividend payments and share buyback, reflecting both our robust cash flow generation and the conviction in the company's fundamental value and the growth prospect. Now moving to our detailed quarterly financial highlights. Before I get started, I would like to clarify that all financial numbers presented below are in renminbi, and all percentage change are year-over-year change, unless otherwise noted. Total net revenues for the second quarter of 2025 were RMB 25.8 billion, compared with RMB 26.9 billion in the prior year period. Gross profit was RMB 6.1 billion, compared with RMB 6.3 billion in the prior year period. Gross margin was 23.5%, compared with 23.6% in the prior year period. Total operating expenses increased by 6.3% year-over-year to RMB 4.6 billion from RMB 4.3 billion in the prior year period. As a percentage of total net revenues, total operating expenses were 17.7%, compared with 16.0% in the prior year period. Fulfillment expenses decreased by 2.6% year-over-year to RMB 2.1 billion from RMB 2.2 billion in the prior year period. As a percentage of total net revenues, fulfillment expenses were 8.2%, compared with 8.1% in the prior year period. Marketing expenses decreased by 3.3% year-over-year to RMB 715.9 million from RMB 740.7 million in the prior year period. As a percentage of total net revenues, marketing expenses were 2.8%, which remains stable as compared with that in the prior year period. Technology and content expense decreased by 9.3% year-over-year to RMB 442.0 million from RMB 487.2 million in the prior year period. As a percentage of total net revenues, technology and content expenses were 1.7%, compared with 1.8% in the prior year period. General and administrative expenses were 1.3 billion, compared with 900.7 million in the prior year period, primarily reflecting an increase in the share-based compensation expenses for Shanshan outlets. As a percentage of total net revenues, general and administrative expenses were 5.0%, compared with 3.4% in the prior year period. Income from operations was RMB 1.7 billion, compared with RMB 2.2 billion in the prior year period. Operating margin was 6.6%, compared with 8.3% in the prior year period. Non-GAAP income from operations was RMB 2.4 billion, compared with RMB 2.6 billion in the prior year period. Non-GAAP operating margin was 9.3%, compared with 9.5% in the prior year period. Net income attributable to Vipshop shareholders was RMB 1.5 billion, compared with RMB 1.9 billion in the prior year period. Net margin attributable to Vipshop shareholder was 5.8%, compared with 7.2% in the prior year period. Net income attributable to Vipshop shareholders per diluted ADS was RMB 2.91, compared with RMB 3.49 in the prior year period. Non-GAAP net income attributable to Vipshop shareholders was RMB 2.1 billion, compared with RMB 2.2 billion in the prior year period. Non-GAAP net margin attributable to Vipshop shareholders was 8.0%, compared with 8.1% in the prior year period. Non-GAAP net income attributable to Vipshop shareholders per diluted ADS was RMB 4.06, compared with RMB 3.91 in the prior year period. As of June 30, 2025, the company had cash and cash equivalents and a restricted cash of RMB 24.7 billion, the short-term investments of RMB 3.0 billion. Looking forward to the third quarter of 2025, we expect our total net revenues to be between RMB 20.7 billion and RMB 21.7 billion, representing a year-over-year increase of approximately 0% to 5%. Please note that this forecast reflects our current and preliminary view of the market and operational conditions, which is subject to change. With that, I would now like to open the call to Q&A.
Thank you. To ask a question, please press star 11 on your telephone and wait for your name to be announced. And to withdraw your question, please press star 11 again. We do ask you to translate your question into Chinese if you are bilingual. Please give us one moment to compile the Q&A roster. And the first question comes from Alicia Yap with Citigroup. Your line is now open.
Thanks, management, for taking my question. My first question is about the latest e-commerce competition. Understand that there is very limited overlap, but curious to get management's view whether the recent stepped-up initiatives of quick commerce by other e-commerce platforms have any impact on Vipshop. Have you seen any change of purchasing frequency declining or budget spend coming down by your customers? My second question is about the weather. So given the recent uncertainty of weather conditions with heavy rain and flood in many areas of China, has that affected the apparel items purchasing demand for the summer clothing? Thank you. 谢谢管理层接受我的提问。我有2个小问题。第一个是能不能请管理层分享一下您的观点？最近电商平台对于即时零售上有非常多的投入，这对于我们唯品会的需求有没有看到任何的影响？我们在消费者行为上，比如说购物的频次或者是预算的花费，对我们唯品会的用户有没有什么影响？我的第2个问题是关于天气的。最近我们看到天气有非常不确定性，在一些城市都有非常大的暴雨或者是洪水。想请问管理层，您有没有观察到任何对于比如说衣服上的消费或者是消费者的需求，对于夏天会不会有什么影响？谢谢。
好，我回答第一个问题，就是关于即时零售啊。对，因为我们的平台是卖服饰为主，那么我们的标品占比不大，那么所以说我们其实看到的，那么目前对我们的影响，我们没看到特别大的影响。但是呢，我们在想就是客户即时零售，那么如果今天它很方便啊，确实有些标品的话很方便，半个小时就送到，他们有可能有时候也不会去等说等到我们电商的快递，有可能要1天半2天半，大概是这样。但是呢，最终还是取决于看货品，比如说到底它的货价格有没有优势，还是不错。如果价格没有什么优势，我估计消费者的选择可能会有一些在标品方面会有一些变化啊。那么第2个我回答一下关于天气的问题。那么最近有暴雨，但是我们没看到我们的消费者在各个城市，比如说因为天气原因啊，暴雨啊，或者什么对他的出行，或者说对他的衣服的购买，没有什么看到特别的变化。因为我们也没看到一些，比如说一些地方很长期的这种情况，也没有看到一些特别异常的数据。
Thank you.
Alicia, thank you for your question. So on the potential impact from the instant or quick e-commerce, we don't see any material impact on our business. We are very much focused on apparel sales, and just a small portion of our business is standardized items, which are more suitable for quicker delivery, especially when customers see they can get most of their daily essentials within half an hour delivery. They may choose to shop on quick e-commerce through quick e-commerce. But overall, we don't see any meaningful impact on our business so far. And on customer behavior, there could be some change, but at the end of the day, it depends on the quality and pricing of the offerings, especially in standardized items. On weather conditions, also we don't see a very meaningful impact despite volatile weather conditions across many regions in China, whether it's rain or flood. We don't see very much impact on people's outing, travel plans or apparel purchases. And we look at the data across different tiers of cities, and we don't see any abnormalities with regard to their travel or apparel shopping activities.
Thank you.
And the next question comes from Andre Chang with JP Morgan. Your line is open.
谢谢管理层接受我的提问。我这边有2个问题请教。第一个问题是关于我们3季度的这个营收指引回到了一个这个正增长的一个区间。那我想跟沈总这边确认一下，就是这个部分的话，有任何去年基期特殊的因素吗？我这边是没有任何印象，但就想确认一下，是不是这代表说我们重新回到了一个正增长的轨道？那可能这个3季度的这个增长的势头可能可以延续到后面的季度，这是第一个问题。第二个问题就想请教一下，就是我们2季度这边回购到了3亿5千万美元左右，这是大概可能2年来最高的这个金额啊。那我想了解说，这个公司在二季度这个回购的力度加大这么多，是有没有什么特殊的考量？那接下来我们今年剩下的时间，随着这个我们预计的这个 quota 还有相当的这个数额，我们是不是还会维持这样子一个回购的力度？那让我接下来翻译一下我的这些提问。Thank you, management, for taking my question. My first question is about the third quarter revenue guidance returning to positive year-on-year. I want to understand whether there's any comparison effect that helping the year-on-year growth, or we are back to no growth trajectory again, suggesting that the company will maintain positive growth in the coming quarters. My second question is about the share repurchase. The company bought back nearly $350 million in the second quarter, which is the highest in 2 years. I wonder if there's any reason for such a strong jump of buyback, and should we expect such a momentum to continue into second half this year, given the management commitment in terms of shareholder return for 2025? Thank you.
我回答第一个问题啊，就是关于 Q3， 我们看到，那么包括我们对未来的预估、销售的预估，我们说看到有正向啊，比如说我们这次的预估是0到正5，那么我们其实是觉得，因为我们前段时间也在努力调整，包括过去几个季度其实一直不算好，那么包括我们把这个用户负增长的用户，我们把它搬回来了，那么现在有正增长，包括我们的用户里面原来新客跌的也比较多，那么我们也看到新客也找到一些方法能正增长，所以说我们自己认为那个就扭转了一些趋势吧，因为是客户增长了，那么我们就看到那个销售也会增长，那么包括我们说的那个另外呢，我们其实努力也在货品上面继续努力，那么更多差异化的好商品，或者说我们要更强调有价格优势，因为我们是特卖等等等等啊，所以说我们其实也看到一些变化，那么我们也希望就是我们以后能延续这种正增长的趋势，那么但是呢就是我们说的，比如说我们说的 Q4 就是这次 Q3 就没有什么关于去年 Q3 的一些特别变化，因为我们是看到自己的那个水平在提升嘛，那么 Q4 的话呢，我们努力也争取，那么要做到正增长，那么但是呢就去年的 Q4， 因为我们其实是做的不错，而且天气还有给力，那么比如说12月份那时候又比较冷，所以说我们反正尽我们努力吧，那么争取在以后尽量都把它做到我们讲的正增长，而且呢有可能叫正增长越来增长，随着那个我们讲的找到这种趋势，那么可能增长的越来越好吧。那么第二个问题呢，那个我们 CFO 来回答。
So Andrew, on your first question on Q3 guidance, we guide for top line growth at 0 to 5%, and we attribute this positive momentum to the efforts we have made in the last a few quarters. We've made a lot of organization changes and adjustments in terms of merchandising and operation, so that we actually have started to see there are clear recovery in terms of customer growth. Total active customers actually have returned to growth so far year-over-year. Especially we have seen new customers which have been struggle for a few quarters have returned to growth as well. If customers start to regrow, and naturally we are more confident about sales and revenue growth. So we actually see, and also on the merchandising side, we've been talking a lot about providing more consumer relevant and differentiated and offerings, especially to provide them with more items at a competitive pricing. So we've done a lot of optimization on the merchandising front as well. So that's why we guide a positive top line growth for Q3, and we don't think there is any material base effect for Q3. And for Q4, we also want to see a positive growth in terms of top line. But Q3, admittedly, we actually had a high base in 2024. We actually benefited to some extent from the long streak of cold weather conditions. But overall, we are confident that we can maintain growth for the quarters ahead, and we are looking to accelerate the growth in the foreseeable future after we see our recent changes and adjustments materialize into real growth engines.
Okay, regarding your second question, thanks for your question regarding the share buyback program. And actually, there is no special reason for increasing the amount of the share buyback in the second quarter. We just committed to return value to our shareholders continuously. As you may be aware that we have mentioned before, we are going to return no less than 75% of our full year 2024 non-GAAP net income to shareholders in discretionary share repurchase and or dividend distributions. Actually, that amount is almost around $900 million. So we just committed to return value to our shareholders, and we will continue to invest in our business growth and improving profit and generating cash to support our dividend payout and the buyback. Thank you.
As a reminder, to ask a question, please press star 11 on your telephone. The next question comes from Wei Xiong with UBS. Your line is open.
好的，谢谢管理层接受我的提问。那我也有两个问题想请教。首先是关于咱们 GMV 跟收入之间这个 gap 呢，观察到这个季度其实相对的比例也是比较稳定的。那想请教一下，咱们最近观察到退货率这方面的趋势，那未来是不是有继续改善的空间？还是说考虑到SVIP 这边持续健康的增长，那么下半年可能这个 gap 还是有稍微扩大一些的可能性？那第二个问题呢是other revenue 这边这个季度的增速还是在环比加速哈，所以想请管理层分享一下咱们杉杉奥莱这边最近一些收入跟利润率的趋势，包括明年一些发展计划的展望。那我也自己翻译一下。Thank you, management, for taking my question. First, we noticed the relatively stable gap between GMV and the revenue this quarter. Just wondering, could management share any latest trend regarding the return rate on our platform? Do we see any further room to improvement to narrow this gap going forward, or that gap might widen a little bit considering the very healthy growth of SVIP users in the second half of the year? And secondly, on the other revenue side, could management share the latest progress and revenue and profit trends for Shenzhen outlet business, as well as some strategic planning and outlook for next year? Thank you.
那么我回答那个第一个问题是关于退货率的啊。那么退货率呢，我们目前整体看比较正常，而且呢，就是我们那个这么多年啊，就最近这么多年，我们看每年的趋势也基本上比较稳定。那么我们自己预估，那么因为我们比如说我们的 SVIP 其实持续在增加嘛，那么我们自己预估未来可能每年那个退去率可能会提升2到3个点，但是在每个季度呢基本上持平的，就是说每个季度的那个退去率基本是这么样，所以说对这块呢我们不会有太大的担心。那么第二点就是关于杉杉奥莱，杉杉奥莱我们现在运营有20个奥莱，那么总体我看他们的业务其实发展都还不错，那么包括我们看到同店啊，那么比如说都有双位数的增长，所以说我们自己认为其实奥特莱斯这个生意在中国还是非常不错的。那么我们其实后续也会看，如果有合适的那个城市或者地方，我们其实可以继续再拓展。那么总体我们认为在中国可以做奥莱的城市其实还有不少啊，那么我们也会持续把这个杉杉奥莱作为一个很长远很稳健的一个我们说的一个商业模式，那么继续把它做大做强。
Thank you, Xiongwei. On your first question, in terms of return rate, we actually see no surprise as regard to return rate. For years we have seen some relatively stable return from customer behavior. It's just that our SVIP customers are growing very nicely at double digits. So we potentially will look at 2 to 3 percentage points increase every year in terms of return rate due to this structural factor, but it will be smoothed out on a quarterly basis, which we do believe that at some point we will see a flattish, return rate quarter by quarter. On the second question on Shanshan outlets, we have seen a very good momentum in terms of Shanshan outlets. We have a total of 20 stores for now, and the comparable same-store growth maintained at double digits for several quarters. We continue to look for the right cities or locations to expand our outlet business, given the fact that the outlet industry is actually prospering in China and are actually riding on the tailwind of value for money consumption. And we do believe that there are still a decent amount of cities or locations that are suitable for outlet expansion, and we intend to build the outlet business as part of our strategic and long-term asset.
I show no further questions at this time. I will turn the conference back to Jessie for any closing remarks.
Thank you for taking the time to join us today. If you have any questions, please don't hesitate to contact our IR team. We look forward to speaking with you next quarter.
This concludes today's conference call. Thank you for participating, and you may now disconnect.